Hello and welcome to another session with the Mindful Rupee. Today let's look at whether bottom fishing is a good strategy or not. Very often when the market falls, lots of stocks fall down and some fall down just based on some news. So a lot of times there is an anchoring bias that this stock was at such a high point and it is such a good quality stock. If it falls, it will go back to the previous levels for sure. So we must buy it. It's a good value. It will definitely bounce and it cannot fall more. But markets don't know anybody. They don't care about anybody's feelings. And a lot of times these stocks just end up being graveyards. So some of the famous examples are Yes Bank, Vodafone Idea, DHFL, Suzlon. Of course, these were all news related. They had some governance issues or some other news related issues, but we never know how deep that news is and how much it's going to make the stock fall. Every time the news is not out in the open immediately, it takes time. So let's just look at one example. Let's look at Suzlon. So in 2008, when the market crashed, Suzlon as well crashed, and then it did give several rallies. It was over here in 2008, March 2008, then again in June 2008, then again in Feb 2009. So every time there was a bounce, it looked like a value buy, that now from here it's going to rise. But the truth is that till today it has not gone back to that same level of 2008. This is the graph as on today, and we are much lower than what we were at that point of time. Let's look at Yes Bank. Yes Bank also, because of various governance issues, had a huge fall in 2018. Again, no stock goes down in a straight line. There were several rallies, one in October 2018, then small rallies in 2019, and then this. Again, this stock till today has not gone to the value it was in 2018. So all those people who had purchased on these rallies thinking that this is such a good quality stock, it cannot go down, it has to come back, were all stuck and they made huge losses. So you can see, even if we take the second rally, it was 179 and today it is just around 22 rupees. So it is a huge loss. So when the market falls, that's another area when the stocks start falling. 90% of the stocks will follow the market and they don't recover alone. Of course, there will be some stock specific movements where the stocks move up but the market is going down. But 90% of the stocks will follow the market. So they only recover when the market environment changes. So let's just look at one example. Let's look at Tata Motors. We all know that in September 2024 the market rolled and Tata Motors as well. The stock has been falling since then. Small rallies have come in between, but it has not gone up. That is because the market still is in a confirmed downtrend. You can see my previous short which I made, which says that the market is still in a confirmed downtrend. So therefore the stock is also going down. Most of the stocks follow the market. So what we need to do, when should we actually start buying the stock? First, we need to wait for the market reversal. Second, institutions then start returning back and then only the market actually starts reversing. Stocks start forming meaningful bases. Basically, then institutions start accumulating these stocks and leaders emerge out of it. So there would be some stocks which are better than the others. And then they break out, and that is the time when we buy. So the key takeaways from this video are: cheap definitely is not equal to safe. We don't know the extent of the news due to which the stock is falling or the extent to which the market is going to fall. falling is definitely not equal to an opportunity. We need to wait for the market to confirm an uptrend and then start buying. As most of the stocks, like I said, will follow the market. Let's not predict. It is better to wait for the proof before we take an action. Thank you so much.